Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is James McDonald, CEO of Hercules and CNBC contributor, to discuss trends in Vol Q and strategies to trade the volatility. James, it's great to see you as always. Welcome back to Trade Talks.
Thank you.
All right, and give us a brief overview of what Vol Q is and how traders can use it.
Vol Q is a new, innovative, and powerful product that gives investors the opportunity to offset risk found in the stock market. Now, when we speak of the stock market and we speak of offsetting risks, we want to protect profits first and foremost. And the majority of profits in this stock market have come from the tech sector. And of course, the Nasdaq-100 is home to the largest, most successful tech companies. And so Vol Q is a very, very powerful new tool to protect investors from risks with the market falling, particularly with sensitivity in the tech sector.
What trends have you seen in Vol Q post-election, and what are you watching into the December expiration?
So we're looking at a potential 20% pullback in the S&P 500. We want to use Vol Q to protect against that. There have been consecutive daily 5% jumps in Vol Q, which show that the market is looking for weakness, and I think that that weakness is pending. We've seen a peak in bullish sentiment historically over the last month. We're looking this week to ISM manufacturing, services, and jobless claims, all of which are threatened to be negative relative to expectations. This, of course, is also made worse based on the increase in spikes in cases of COVID. Obviously, you know, I'm stumbling with my words because it's almost surprising that every week we have new records in cases and deaths throughout the country. And so that's forcing shutdowns, which is going to put contraction and put pressure on markets, which gives us a very, very strong outlook for Vol Q. We've seen acceleration in cyclicals. Tech remains overvalued. It's up 40% year to date. It's trading 20% above its 200-day average. And the last 7 such deviations between 200-day moving averages and gains over that amount have resulted in corrections of 10%. And so going back to 2018, when we've seen kind of the peak of this bull market, we would get weakness here based on historicals. And so, of course, the Nasdaq-100 is 50% comprised of just 6 stocks: Apple, Microsoft, Amazon, Facebook, Google, and Tesla. These companies have had massive runs. If you look at Tesla, Tesla's up almost double in the last 60 days alone. This is going to go in the S&P 500. This is one of the holdings in the Nasdaq-100. There's a lot of risk, and what we want to do with Vol Q is offset that risk. We saw today, with just some weakness in the market, Nasdaq and the S&P coming off about 1%. You know, we saw a 10% rise in Vol Q initially there. And so that gives you some indication of when there's weakness in the market, particularly a threat in the tech sector. Vol Q can be a really, really good place to put capital in order to offset that.
Yeah, it's a good point that you make about economic data as well, because of course it is behind. It's not what's happening right now. So it's almost behind the cases that we're seeing increase. And I agree with you. It's hard to wrap your head around just at how quickly the cases are climbing. So for the remainder of the year, would you say that Vol Q beyond December expiration is showing the same thing as well? We have a little bit of a rough patch to get through.
Right. I think that Vol Q is really going to be a good short-term, medium-term, and long-term bet here, with markets being as overvalued as they are, and with the threat and the risk of COVID accelerating here. Although we have a vaccine, that vaccine is not promised to make an impact in our society for several months at a minimum, and then for only a portion of society, perhaps not a full solution until next year this time. And so we like Vol Q short-term, medium-term, and long-term here, particularly as we've come off of 52-week lows on Vol Q and then 52-week highs on an overvalued market. It looks very promising here, both for the short-term and long-term. And so we'd be going out into expirations first quarter, second quarter, third quarter, fourth quarter, 2022.
Right. We'll get to your strategies in just a moment here, but I want to dive a little bit deeper into the growth versus value trade and some of the thoughts you have on the underlying stocks there, because as you mentioned, it sounds like it's going to be more of a trading environment before we can see longer term trends set up as we continue to get higher counts in COVID, as we start to understand how the vaccine is disseminated among the population, if in fact it works well. So it seems like that trade's going to be around for a while as we jockey back and forth with the data.
Yeah, and as the data comes out, people make their assessments. Of course, the presidential election is behind us. We're pretty sure we have a new commander-in-chief incoming, and that commander-in-chief has got a different priority than the last one does, right? And so that's going to make an impact on where capital is flowing. In light of the risk in the market, we will get through it, and when we do, we're going to have a different congressional situation. We're going to have a different executive office situation. There's going to be a lot of emphasis on green energy. There's going to be a lot of emphasis on reopening trade to the extent that that's possible. And what that's going to do is it's going to create a different mandate for investment managers looking for trades and or investments. And we certainly think that tech is going to play a major role. China released its 5-year plan about a few weeks ago. And in that 5-year plan, they had 5G as their emphasis. And so as we know, 5G is going to be the arbiter for success for not just tech, but communications and e-commerce and cloud and smartphones and the Internet of Things. And all these are areas which come from the Nasdaq. And so the Nasdaq is going to be the growth story, and VolQ is going to be the protection story for that upside potential in the Nasdaq.
And James, to wrap up here, what are some potential strategies that you're using with VolQ futures, or in fact, even if we look at the Nasdaq-100 index or the QQQ ETF?
Right. And so we're very, very cautious here. We think markets are about to tip over because they're so overvalued. We've only seen this level of valuation once before, just before the dot-com bubble burst, and we're only 1% shy of that, which is valuation versus GDP. In that context, we want to use VolQ as protection for a typical portfolio. That means anywhere between 8 to 15% exposure for offsetting downside risk. And then for upside, we do pure play VolQ access for investors who want growth. Obviously, we want to buy VolQ when markets are rising and when markets have the vulnerability to fall and take quick profits there. On the triple Q, on the Nasdaq-100 puts, we want to also generate exposure to protect against the downside. Obviously, when markets are near or above all-time highs, the risk here is to the downside, not so much expectation for further upside.
All right, James, great to see you as always. Thanks for joining us on Trade Talks, and thanks for joining me on Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much.